I myself, I consider myself a pretty smart investor sometimes, but I lost like 91% in one stock in 2008. I did make the mistake of chasing the dividends. Never chase the dividend yield. Today we're going to be talking about dividend paying stocks. And I'm going to tell you about why it might be a good idea to include this in your portfolio. Now, a lot of people want passive income. This has been a huge topic on YouTube for a really long time. I think it's always been a topic because people want a predictable source of income every single month without having to work extra for it. And dividend paying stocks can be a very useful way of achieving this objective. Basically, dividend paying stocks are companies that use a portion of their profits to give it back to the shareholders instead of reinvesting it in the company. As an example, a lot of people invest in stocks for growth. In other words, they actually want to invest in someone else's business where they will become profitable, and the profits are then used for research and development in order to really push the stock price up. Now, some people they do appreciate things going up in value, like their stocks, but they also need a predictable source of income for instance, paying rent, paying HOA bills, maybe paying property tax. So it isn't so having a stock that goes up in value is not the most important factor for them. What they and maybe what you prefer is knowing you're going to get a certain amount of money every single month, and of course, while limiting as much risk as possible. Now, dividends are actually a signal sometimes that a stock is actually relatively healthy because, for instance, if they are able to pay you some of the profits, it's a sign at least that they're profitable. Now, some of these companies can be sketchy, and maybe some of them are actually not using their profits to pay the dividend. Maybe they're borrowing money. If a company is borrowing money, or it looks as though the dividend is way too high, like 9%, that is a really huge sign that something is really quite wrong with the company. As an example, despite what people say about how dividends are safe and they are a guaranteed way of making money, I myself, I consider myself a pretty smart investor sometimes, but I lost like 91% in one stock in 2008. I did make the mistake of chasing the dividends. Never chase the dividend yield, and especially if you go beyond a certain range, like if you're going above around 5 to 9%, which actually usually tracks a lot of people. There's usually a sign why they're willing to pay that much. It usually entails a much higher risk. And so I think it's very important instead to focus on quality companies that are highly unlikely to reduce the dividend. As an example, despite the fact that people are talking about, I see some people even talking about bank stocks, but people don't seem to realize that if you're depending on this dividend to come every single month, financial stocks during the financial crisis cut or even eliminated all of the dividends that they were paying their shareholders. And not only that, but the price of their stocks also tanked too. So it's really like a terrible, it's like the worst of all of cases, that you lose your money and you're not getting your monthly check that you were hoping to get. So that really was a disaster for so many people. And it kind of makes sense that bank stocks would do bad in the financial crisis because they're the most impacted. They are really embedded in the financial system. So if everything's crashing, they're probably not going to have extra money to provide their shareholders. Now, there actually is a list of companies that have been increasing the dividend over the last 20 years. It's called the S&P Aristocratic Index, and actually you can buy an ETF of these companies. It would actually include all the companies that are in the S&P Aristocratic Index. It's a pretty prestigious group of companies. Basically, they have to prove that they have taken policies to ensure that they are able to pay the dividend during either every single month or every quarter. Most of the time, it's by quarter, but there are some stocks that actually do pay the dividend per every single month. As an example, one company I've owned it in the past. It's called Realty Income Corporation. I believe that it trades under the stock symbol O. Basically, this is an incredibly brilliant company in terms of the way it's managed extremely conservatively, especially geographically. It's in, I believe it's in 49 states. It's not in, and they only focus on corporate tenants for extremely long leases, around 20 to 30 years. So they're not dealing with tenants that want to stay there for a year, see if their business works. Nope. They are actually very focused on corporate tenants like FedEx, LA Fitness, or 7-Eleven. What you should also think about is that, yes, in this time period where so many people don't shop for things anymore, unless it's Amazon.com, the truth is that there are a number of businesses that still succeed in the real world because there really isn't a way to do this online. You can't go to your gym on the internet. You can't go to a movie theater online. For 7-Eleven, you go there for convenience. You don't say, "Oh, I want that popsicle. Ship it to me through Amazon." Maybe one day they could do that, but they won't be able to do it immediately. That's why people go to 7-Eleven. They're not going there for the low prices or anything like that. And another tenant they have is dollar stores. So people cannot get dollar store items on Amazon because it just costs too much with shipping, and you can't, even if you have Amazon Prime, you're just not going to get items like that. So what they do is they actually are, their tenants are staying there for anywhere for 20 to 30 years, and they have built-in rent increases into the contract, so that allows them to increase the dividends that they are paying their customers, their shareholders. And the other cool thing about Realty Income is the fact that that they actually do not. I believe that they figured out a way to not pay hardly any tax, maybe no tax. Now, as an example, since it's an REIT, if they pay 90% of their profits to their shareholders, 90%, then they don't have to pay any federal income tax. Number two, they don't pay property tax because they make their tenants pay for it. Yeah, that's the way to do it. You guys pay for it. Number three, they don't even have to pay for any of the maintenance costs of running any of their properties in all over the country. I believe the tenants are responsible for paying all of the upkeep of the property. And so in other words, this operates in. There's not really the most important thing with O is that there isn't really a risk that they won't have money come in to pay the dividend. What is a bigger risk for someone like O is if interest rates rise dramatically, and that could happen because we're at interest rates are super low, and that's one reason why everyone is chasing yield. But if interest rates were to rise dramatically, it's possible that people would say, well, realty is still more risky than like a bond or a savings account if those rise to a certain level. That could actually impact the stock price, but it still would pay. It still very likely will pay the dividends because of their source of revenue is pretty secure and diversified, and is not really related to the internet economy. So, I think that I think that dividends are a lot better than some other investments. Like I know a lot of people say, "Yeah, I own 10 apartment buildings, and I love managing it," but I don't want to get a call at 3 a.m. about fixing a toilet or something like that, or a client not, or someone not paying rent and stuff like that. That's really, to me, that's kind of a real severe headache. I don't want to deal with these kinds of things. So I think that a lot of us like the idea of the dividends as a stable source of income without any of the headaches, any of the bureaucracy of property. Maybe property is a good alternative, and I'll look into that in the future. But I think that the most important thing is also realizing in some cases these dividend stocks can actually be less volatile because just because the fact that they are paying a dividend is kind of an indication that there is a little bit more of a stable source of revenue for some of these companies. You'll notice though, some of the best companies will not be paying a dividend because, and it's because especially because they're focused so much on growth that it makes no sense to give you some money back when they can actually use your shareholder money to grow the business dramatically. Think of how Netflix would have been hindered if they were paying dividends to their shareholders. They wouldn't have been able to grow as meaningfully. Instead of buying content, they're giving you a check. But maybe as a result, there would be fewer customers to Netflix because there just wouldn't be as much content. So it's just important to realize that that there are many trade-offs that exist with dividends, and people don't seem to realize that. It's also not a risk-free thing. It's always important. It's always important to consider risk, and it's also important to hit the like button. It definitely helps with the Google algorithm. And I really do hope that this video was helpful to you. I hope to actually delve into dividends with even more focus in the future. I know that there's incredible focus right now on dividends, and I think that it makes sense because we've been in a bull market for a long period of time, and I think people are looking for something that pays them to be patient because that really is something that's important. People should even consider, just one last thought, I think that people should consider what would happen if your dividend paying stock went down 50%. Would you be happy that you're just getting your dividend even though you've actually, technically you've lost money? You could say, well, I'm a long-term investor. Well, a lot of people who say that right now change their mind when they start losing money. They start thinking, well, I don't think I really want to stay in this anymore. And a lot of people will sell at the bottom in every stock market crash. So it is important if you're one of those people. You don't want to be one of those people. So anyway, signing out. Be sure to subscribe.
Sorry, I couldn't find a relevant podcast to subscribe you to.